Hello, ladies and gentlemen. It's Greg McCloskey. I'm going to take a look at the euro versus US dollar for FX Street. If you take, I'm going to start off by taking a look at the daily chart. And one thing, what is important here off the daily chart from a technical perspective, in my eyes, is this level of trend line support here. It's actually a channel trend line support. The market would broke through that level on this May 14th, and since that time, the market has stayed below this trend line, not able to close above that trend line. That's of significance for the bears and is keeping the bearishness in the euro intact from a daily perspective, and where does it turn positive? The market, if the market should move above the 124.20 level, that would take the market price back above this trend line, and we should see further moves to the upside after that type of move. But as you can see today, we did get above that level, reaching a high here of 124.37, but that was reversed, and the market moved back below that 20 level. And since that time, the market has been here's that 20 level. We broke above it for a brief time period, and then started to move below it and move to the downside. Now, off the hourly chart, if we transition to that chart, what we can say over the last 1, 2, 3, 4, 5, 6 hours is this 100-hour moving average line has been breached to the downside, has traded above it, but each of the closes here, apart from this one right here, the first one in the series, has been above the 100-hour moving averages, that giving us a clue that perhaps there are some more buyers down below. We'll be using that as support because we have to trust what the technicals are saying. The technicals are saying we're above the 100-hour moving average. That gives the market a little bit more bias to the upside. So 123.330 is going to be our key level on the downside. Now, where's the key level on the upside? And that we have to break in order to confirm the moves. And I'm going to look at the 5-minute chart in this case, and I have a couple lines in here. Well, first of all, I have my 30 level in here on the downside. This is going to be my key support level. As long as the price can remains above that, that's going to be positive. On the top side, I've blocked out this area right here between 58 and 66, and that level has been a level of, you can see a level of support here, level of resistance here, level of resistance here. We kind of moved a little bit above it, failed, use it as resistance here, use it as support here, use it as support here, use it as resistance through here, use it as resistance here. It becomes what I call a remembered line. And if you go back in time and actually watch this area right here as I scroll back in time, you can see that we went in that area there, we went in that area here, and I moved back even further in time, and the market used that as resistance. Well, we're up here at this here. We paused at that area there. We used it as support here. We used it as resistance here. We broke through it here. We used it as support here. We used it as resistance here. You can see, how the market kind of uses levels as a support and resistance level through time, and that becomes what I call a remember price. Goes all the way back here to May 14th. That level was important. So what I would deduce from that, and from a trading perspective, is that I'm going to use this level as a resistance. I'm going to use this level as a support down at 23.30, and most of the activity has been in here. And what we're going to be looking for is a break either to the upside above this 123.66 level, or a break below the 123.30 level. But we have to see a sustained break. We can't have these periods where the market goes below it and then reverses, or these periods where the market goes above it and then reverses. That's not the essence of a trend type move. And I'm sorry if you get stopped, if you end up getting whipped around because the market doesn't continue in that direction, and you end up covering when the market moves back in this yellow section, or perhaps you you go long here and you get you have to cover your position when the market moves back in the yellow section. That's what trading's all about. What you have to do is you look for the longer that the market consolidates and coils in this region, and has these key levels that either fail, that's almost good news, because the longer the time the market fails at those areas, the better chance that the market is going to break to the upside or break to the downside. So we're getting prepared for a break, and if the market can move above either of these levels, look for the momentum in that direction. This is Greg Michalowski with a look at the Euro versus US dollar for FX Street.